The European Central Bank left all of its key interest rates unchanged on Thursday, opening the door potentially to a rate cut at one of the upcoming meetings, but really didn't give too much away. Christine Lagarde gave very ambiguous messaging, which is something that we've become accustomed to from the European Central Bank. The statement was very much in line with that as well. She did acknowledge that inflation has been falling, that the economy is struggling and the demand is falling. And perhaps it's this that markets have got a little bit carried away with, because the rest of her messaging was very non-committal and really sought to give as little away as possible. She had previously said in Davos that she thought that interest rates may start falling in the summer, which many took to mean June, because that's when we'll get the new economic forecasts for the summer. And she didn't go against that this time around, but she also didn't really reconfirm it. That ambiguity is something that Christine Lagarde has often gone along the lines of, and that's exactly what we saw again. So really, the investors had very little to go off, and what they did have to go off, they seem to have got carried away with. As you can see here, the ECB interest rate probability chart. Now, there's a lot going on here, but the key thing to look at is the bottom, and that's where you can see the probabilities for the upcoming meetings, the meetings down the left-hand side, and where the key interest rate is expected to be based on market pricing. Now, you can see that the markets are pricing in 150 basis points of rate hikes, rate cuts this year, with quite a strong probability. Now, that's more strong than what we were seeing prior to yesterday's meeting. So clearly, investors have taken something from what Christine Lagarde said. Not convinced by March, but they do think it's probably likely to come in April. That's going to change a lot over the coming weeks. The key data to come that will determine just how live a meeting March is to come over the next 6 weeks. We'll get 2 inflation reports, and I think they will be critical. The euro area is not too far from hitting its inflation target. Some countries have already hit the target. Some are even below the target. So if we can see inflation coming down towards that 2% level over the next couple of readings ahead of that March meeting, then I think you'll see the odds of a March rate cut increase significantly, and it'll be something that the European Central Bank will find it very hard to go against. So let's see what that means for a chart. And here we have a euro dollar chart. And what's interesting about this is we did see it ease lower, but we haven't seen a dramatic move to the downside. It is worth noting that this video is being recorded ahead of some US inflation data later on today, so this could change, but it doesn't really change too much from an analytical perspective unless the inflation data from US fundamentally changes something from a dollar perspective. But what we've seen here is a long-term trend of sideways movements in the euro-dollar pair. You can see here as I scroll out, going back towards the end of last summer. We've very much been in a sideways trend, broadly between 105 and 110, occasionally spiking above and below, but largely speaking between those two levels. And the reason why I've highlighted the fib here is because if we are going to see a rotation higher, then these fib levels here could potentially be quite important. And we have already now consolidated within that area around 108. That being said, if we take a look at the 4-hour chart, it looks a little bit different, because on the 4-hour chart, you can see that after an uptrend that we saw here going back to that October period, we did see a head and shoulders form. The left shoulder starting to form in mid-December, the head forming late in December, and the right shoulder forming in mid-January. We've broken below that neckline, but we haven't really seen a completion of the breakout. And by that, I mean, we haven't really seen a significant move to the downside. Now, as per the textbooks, from head and shoulder formation, similar to double tops, what they enable or what they give us in terms of information is potential price projections. Now, the shoulder to the neckline, the size of that move projected lower, is a relatively conservative price projection if this pattern is completed. From the head to the neckline is a very aggressive price projection. Now, the thing about the daily chart is a lot can change in between the breakout happening and the formation effectively being complete and the projection being complete too. And perhaps that's what we're seeing. But so far, we've only seen a modest move below that neckline. So if this is a bearish formation as it appears and the fundamentals have not changed, then you could potentially see a move below the most recent low and a continuation to the downside, completing that pattern. What I find really interesting here is when you take the high from the right shoulder through to the low that was made on the 23rd of January, we did see a corrective move back above the neckline, but it rotated very smoothly off that 61.8 fib level and back towards these lows. So for me, the key now is, can we break below those lows and continue that move lower, confirming the kind of bearish trend which we were already seeing unfold, or are we going to see a move higher and effectively undo what we saw previously? Because a new higher high above that 61.8 fib could potentially significantly weaken the influence of that head and shoulders formation. So an interesting one to watch. And as I said earlier, the key to this may lie with the US inflation data later on today, or it could potentially lie with some of the data that we've got to come over the couple of weeks. But at this point in time, this is still a currency pair that looks relatively bearish from the daily and 4-hour charts, but this could ultimately change, especially when we're getting so close to either the Fed or the ECB or both cutting interest rates either from March or shortly after.